Welcome to today's video where I'm going to give you my 8 crypto predictions for 2025. We are going to talk about how long this bull run is going to last, Ethereum's potential to flip Bitcoin and some new potential altcoin ETFs. So if you want to stay ahead of the curve and see what is going to shape the next wave of crypto, watch this video until the end. My first prediction for 2025 is longer and slower bull run than most people expect. I believe the bull run won't end in first half of 2025 as some people think, but instead extend into Q4. Sure, we might see a summer correction, but prices will likely be higher by the end of the year than the first half. Here is the key. The Fed is delaying its big liquidity injections. They hinted at stopping balance sheet reductions in May 2024, but still haven't fully pivoted to printing money. We'll be watching the next Fed meeting closely. January and March will be critical. Rate cuts are also happening slowly, which is actually good for a sustained, healthier market. A fast series of cuts usually signals an economic crisis and is a brief rally followed by a crash. Instead, slower cuts mean more time for growth. On top of that, recession fears have cooled. In mid-2024, recession probabilities were above 50%, but now they're down to just 29%. With no major economic collapse on the horizon, it's looking like a longer bull cycle is in play. Now let's talk about altcoins. Many traders are misreading this cycle. It's not driven by memes, AI hype or crypto Twitter, it's institutions, ETFs and macro events driving this growth. Just look at Bitcoin dominance. Spot ETFs alone have absorbed over 5% of Bitcoin's total supply, and their inflows and outflows directly affect price. This kind of institutional impact hasn't fully reached altcoins yet. Ethereum, for example, only started seeing meaningful inflows after November 2024. In my view, calling the top now is way too early. We've barely seen the real catalyst: Fed liquidity injections, further ETF approvals, and macro-driven institutional adoption. The best might still be ahead of us. For my second prediction, I believe Ethereum will outperform Bitcoin in 2025, possibly by a significant margin. Here's why. Ethereum ETFs are already showing strong inflows. Since November 2024, over 5 billion has flowed into Ethereum, representing 0.65% of its market cap monthly. Compare that to Bitcoin ETFs, which since their launch in July 2024 have seen about 0.55% of Bitcoin's market cap flow in monthly. Institutions are clearly leaning towards Ethereum, and if this trend continues, we could see a major shift in the percentage of Ethereum held in ETFs overtaking Bitcoin. Seasonality also favors Ethereum early in the year. Historically, Ethereum performs better than Bitcoin from January to June, making the first half of the year a good time to hold Ethereum. Currently, the Ethereum Bitcoin valuation sits at approximately 0.033, and I believe that it has the potential to trend higher throughout the year. While predicting exact price levels is always challenging, waiting for Ethereum Bitcoin to drop much lower could be an increasingly risky in my view. This perspective has even influenced my trading decisions. I flipped some of my Bitcoin into Ethereum within my trading portfolio. My strategy here is straightforward. By capitalizing on Ethereum's relative strength against Bitcoin, I aim to grow my overall Bitcoin holdings. That said, this approach isn't without risk. The crypto market remains volatile, and such moves require careful risk management. But for those who see Ethereum's potential in the near term, the upside could outweigh the downside. It's clear that Ethereum still has plenty of room to grow this cycle. While Bitcoin remains the foundation, Ethereum's momentum, especially early in the year, makes it the one to watch closely. My third prediction in 2025 is that I'm expecting at least one more altcoin ETF to be approved, with Solana and Chainlink positioned as strong candidates. As the crypto market matures, institutional interest will continue to expand beyond Bitcoin and Ethereum, and these two projects are well positioned to benefit. Both Solana and Chainlink have strong use cases and substantial ecosystems, making them prime candidates for ETF inclusion. The approval of these ETFs would mark a major milestone, bringing more institutional money into altcoins and signaling growing mainstream acceptance. Solana's fast, scalable blockchain and Chainlink's dominance in decentralized Oracle solutions are both key drivers that could push these assets to new heights. As we see, the SEC and regulators become more comfortable with crypto, altcoins ETFs will likely follow, giving projects like Solana and Chainlink an edge in the coming months. My fourth prediction for this year is that a major central bank will buy Bitcoin. It's been widely overlooked, but the idea of a major central bank adding Bitcoin to its balance sheet is becoming more likely. We saw hints of this when the Swiss National Bank mentioned in 2022 that it might consider buying Bitcoin someday. While the news was largely forgotten during the bear market, the notion is resurfacing, and it's not surprising considering the ongoing studies by central banks like the ECB on how Bitcoin might impact their balance sheets. Interestingly, even the ECB, which has traditionally been one of the most anti-crypto central banks, is examining this. Donald Trump has intention to create a strategic Bitcoin reserve, and this could significantly increase the chances of this happening sooner than expected. Fifth prediction for this year is privacy and identity protocols will take center stage. As crypto moves from speculative investment to real-world use cases, privacy and identity will become central issues, especially for institutional investors. For individuals using stablecoins for payments or institutions holding Bitcoin reserves, it's becoming clearer that on-chain privacy simply doesn't exist. Unless you're using privacy coins, all transactions are public and can be easily tracked using a blockchain explorer. Analytics companies can track your every move and share it with governments or other entities, especially if you have done KYC on exchanges. You might not care about this when you're just buying and holding crypto, but you'll definitely care when you start using it for payments. No one wants their wallet balance or transaction history visible to the public. And for governments or institutions, this lack of privacy is a major issue. That's why I've been predicting for a while that institutional investors will push for stricter privacy regulations, not for our benefit, but for their own. This could even lead to privacy upgrades for Bitcoin itself. But at the same time, these institutions will want to monitor everything we do in detail, which is why I expect a digital identity requirement to be eventually introduced for DeFi interactions, just like KYC was for exchanges. This won't happen immediately, but if a major hack or exploit occurs, it could trigger a push for such regulations in the next cycle. My sixth prediction is that non-sanctioned countries will adopt crypto for trade. While sanctioned countries like Iran and Russia are already reportedly using crypto for international trade and North Korea might be doing the same with stolen crypto, this trend isn't as alarming as it might first appear. While it's true that this usage could facilitate the evasion of sanctions and finance activities we might not agree with, it also highlights a crucial development. Crypto is proving to be an effective tool for international trade, something that non-sanctioned countries can also adopt. Just like Bitcoin's early days when it was primarily used for questionable purchases on the dark web, crypto's use by these countries sets a precedent. Over time, Bitcoin's adoption expanded and today it's widely used by everyday people far removed from these dark origins. Now, on a nation-state level, we're seeing the same adoption curve unfold. This sets the stage for a future where crypto isn't just for personal transactions, buying coffee with stablecoins or trading Bitcoin. We are on the brink of crypto becoming a standard tool for countries to conduct trade with each other. It's already happening, but by 2026, we believe it will go a truly global. For example, did you hear that Tether recently facilitated an oil trade using USDT? It's just a small sign of what's to come. Prediction number 7 is that blockchain and AI synergy will gain traction in 2025. The integration of artificial intelligence and blockchain technology is gaining momentum with its potential to revolutionize sectors such as finance, gaming, supply chain management, and healthcare. By combining blockchain's transparency, security, and decentralization with AI's predictive capabilities and automation, new use cases are emerging, and that could fundamentally change business operations and consumers' interactions. In finance, AI could analyze market trends and make predictions, while blockchain ensures secure, transparent transactions. Together, they could enhance decentralized finance, DeFi, and improve fraud detection. In gaming, AI-driven non-playable characters, NPCs, could provide more immersive experiences, while blockchain guarantees secure ownership and trade-off in-game assets. Similarly, in supply chains, AI could optimize logistics, while blockchain tracks transactions for greater transparency and fraud prevention. As this synergy grows, expect a wave of AI-focused crypto tokens designed to power decentralized AI applications. These tokens could drive new opportunities for developers and investors in AI and blockchain, creating an exciting digital ecosystem. By 2026, the fusion of AI and blockchain will likely play a key role in transforming industries, offering more efficient, secure, and scalable solutions across the board. My last prediction for this year is that a new country will buy Bitcoin in 2025. I believe we will see another sovereign nation officially adopting Bitcoin as part of its monetary or reserve strategy. While El Salvador led the charge in 2021, paving the way for smaller economies to explore Bitcoin, the next adopters are likely to be larger or strategically significant players. Why now? Several factors are aligning. First, the growing instability in fiat currencies, particularly in regions with high inflation or reliance on external debt, makes Bitcoin an increasingly attractive alternative. Countries like Argentina, Turkey, or even some nations in sub-Saharan Africa could make the leap to stabilize their economies or hedge against currency devaluation. Second, the adoption of Bitcoin by institutions and central banks has started to normalize its role in finance. For example, the recent discussions around Donald Trump's proposal for a US Bitcoin reserve show how the conversations is evolving at a global level. A new country stepping in to adopt Bitcoin would add significant legitimacy and further catalyze the trend. Moreover, blockchain analytics are already hinting at increased activity from wallets tied to governments and large institutional investors. Some smaller central banks are rumored to be experimenting with Bitcoin holdings, although official announcements remain scarce. This could also spark a domino effect. Once one more nation successfully integrates Bitcoin into its reserves, neighboring countries or trade partners may follow suit to maintain economic competitiveness. By 2026, the geopolitical impact of Bitcoin adoption could go beyond individual citizens and institutions, firmly placing it in the hands of national governments. That's it for today's predictions, and only time will tell what of them are going to be correct. Remember, crypto is always evolving, and while these predictions can be interesting, the market can be very unpredictable. Nothing on this channel is financial advice. Stay tuned, stay informed. If you found this video helpful, leave a like, subscribe to the channel. Thank you for watching, and I'll see you in the next video.